Hello everyone, this is Ryan Mallory for SharePlanner.com. Today is February 21st, 2012, and first day of post-bailout Greece. A lot of hype going into it. You heard a lot of people saying that the market's going to, blow through 13,000 on the Dow today. It did momentarily, but it did pull back. A lot of people thought this would initiate the next leg up in the market. Didn't really do that today per se. In fact, there was probably more weakness throughout the day because of where we started with the futures on Monday night after the market being closed. And for the most part, the market just steadily sold off from the highs in the futures market from last night. And but don't put it past the bulls to try to find the dip. They try to do it plenty of times throughout the day. You can see here the Dow closed about 35 points away from 13,000. Could still do it tomorrow, no doubt. But the S&P, if you look at the intraday action on the 5-minute chart, this one right up here, you'll see that we had a nice little strong spike up, and then after settling around here, we formed what was an intraday head and shoulders pattern, only to sell off into the close, followed by one of those knee-jerk buy the dip reactions into the last 30 minutes of trading or so. So the S&P still managed to close about 1 point in the green, but it was a victory for the bulls in the sense that the bailout talks, which there was some uncertainty going into it, so it wasn't a complete certainty that the bailout would be made. Had it not been agreed to, you would have seen probably blood in the streets today. But there was an agreement, and nonetheless, it was a quasi-sell the news event today. One thing that I do recognize, and I know if you're a bear that you're probably frustrated beyond grief about how hard and how fast this market has moved against your short positions without even the slightest pullback in the market to where you could get out of those losing positions if you wanted to. Instead, since mid-December, or December 21st is probably the better, December 20th, we've gone straight up. I mean, you look at a small pullback here before the end of the year, but since then, I mean, you have had very small pullbacks. This one being one of the bigger ones, but outside of that, you have this constant theme of buying the dip. And that happened again today. I mean, we sold off for the most part throughout the day after consolidation early morning, but by the end of the day, you saw the dip buyers come back in and boost the market about another 4 points or so right before it closed. The best antidote I really have for this market is to look back at this time last year, because it is eerily similar. In fact, if you were to take this area right here, you could actually transplant it and put it on top of this price movement, and there wouldn't be much deviation. You halfway through the move, you had this significant pullback, though the pullback in November was much more severe in what we saw. Nonetheless, though, you had this huge move up, and then again you had this unstoppable move thereafter. So very similar in price patterns. Now what eventually happens, though, is you have a pullback. Last year it happened at 1344, which is what we're past at this point, but you had a good 100-point correction, in a matter of, a few weeks. So 100-point correction at this point would take us to like 1262 or so. I don't know if we'll see something like that or not. We do have some channels that we're trading in. So the first line of business, really, I used to say the 10-day moving average is what you want to be watching in this market, and most of the time that's true, but from what we've seen of late, we haven't really seen the 10-day moving average get taken out and stay that way. I mean, you had it here, but then we had this like nasty rally into the close, followed by a doji the next day, followed a resumption of the continued trend. We had it here again, but then the next day we just went right back above it and created new highs in the market. So if we close above, let's say tomorrow, let's say if we had a sell-off and we closed below the 10-day moving average, I probably wouldn't put a lot of weight behind it. What I would really want to see from a bear standpoint is whether or not we can break below that 20-day moving average. Because If you look back throughout this entire year, we have yet to drop below it, and it hasn't been since this resumption of the upward trend occurred back on the 20th of December that we've been below the 20-day moving average. So that is, that's close to about 40 sessions worth that we've been trading above the 20-day, and all but three that we've been trading above the 10-day moving average. So the 20-day, I think at this point is more important. Then after that, you would get a test of this trend line here. And we break that. You would say this trend line right here would be your next significant line of support that you would want to see taken out from a bull standpoint, which also is coinciding right now with the 50-day moving average very nicely. So, just to review, ignore the 10-day moving average at this point. It's more or less something to note. You got the 20-day at about 1338, and then you have the next trend line at about 1324, and then after that you have a trend line at 1297. So those are the three support lines that if the bears really want to see the selling accelerate, hard and fast, a la last November, October, or August, you're going to need to see those support lines taken out decisively. Now, for the bull standpoint, I would caution them once again. We are in overbought territory in the very near term. It goes without mentioning that we've been overbought for two millennia now in the intermediate and long-term perspectives. But nonetheless, really the big part for the bulls, and it doesn't take as much detail, as the bear case that I just rolled out. You need to break 1370. That's pretty much it, because then that's a new recovery high from, when we were back in 2008 and we were selling off madly. You have new recovery highs at that point. So that's really what they need to be talking about, and then at that point, you can start looking at like 1450, which is a long ways off, and then 1577, which is even further away. So those are long-term targets. But right now, short-term bears or bulls need to take out 1370. Bears need to defend that very aggressively. Other indexes, you got the NASDAQ. Talks about it crossing 3,000 in the very near term. Not impossible to say the least. You can see here on the weekly chart, going back to 2003, it's at 12-year highs. So very bullish action there. Dow Jones, once again, new post-recovery highs. Here we're touching 13,000 or so, or right underneath it. Once it can break through that, you're going to have a lot of people talking about 14,000 right off the bat. You're going to have some resistance at the 13,200 level, 13,150, and then there's really not a lot of resistance thereafter. You have some maybe at like 14,120, but that's a long ways away. So, and a couple of stocks that are worth mentioning. Apple, you had a ferocious buy the dip here at the end of the day, which also led to the rest of the market as well. It was already up on the day, but it was pulling back with the rest. But once it hit that 506 level, it shot up $8. Jeez. But Apple, it's looking tired just like the rest of them. Just look at how parabolic this one has gotten over the last few weeks. Over the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks, you've had 9 solid up weeks. So that is definitely getting parabolic. You look at it from the daily chart, you can see there's a lot of confusion here in the stock, followed by a nasty bearish engulfing pattern. But once again, why would you short this stock? Because it's fundamentally probably the best company in the world. So there's better choices out there than to go after a stock like Apple just to try and prove a point. But notice once again here, riding that 10-day moving average, very hard for it to break that. It's found support at it. So if you're a dip buyer, you probably want to get into Apple, at the 10-day moving average. If you're looking to short it, which I hope you're not, you'd want some kind of confirmation below that 10-day moving average. Gold, I think gold's sort of interesting just because, fix that line there. you have what I would call a bullish flag working on this thing that it broke out of today. And I'll just grab one of these lines here. And that bull flag can be best described as these two lines right here. See that? If you look at the long-term trend, it's been moving up, and then it essentially created a long-term bull flag pattern that it broke out of today at 171 is where it closed at. So I would say things are looking very bullish for gold in the days and weeks ahead. And would not be surprised at all to see a retest of its all-time highs at 186. USO, this sucker is in full-fledged breakout mode, which, you know, I really don't know if this bodes well for the markets in general, having the commodities showing such inflationary tendencies at this point. But oil up another 2% today. I mean, gas prices are already at 360 somewhere. Some parts of the United States is at $4. So seeing at these kinds of levels is not good for the economy, and eventually the market will take note if that continues to persist. All right, and that's going to do it for today. If you guys have any questions, I'll always be in the chat room, and we're very, very close. I keep mentioning this, but I'm very excited about the fact that we're close to rolling out the new chat room. So be on the lookout at that. It could happen tomorrow. It could happen at the end of this week. But I'm pushing for it as fast as possible, and I think you guys will be really excited once this thing rolls out, because there ain't going to be any other chat rooms out there that matches this one in terms of being able to share ideas, trading concepts, and all that stuff. So be on the lookout. Y'all have a good evening. God bless.